Discounting. What is discounting? Discounting is the other aspect of time value of money. As we discussed little while ago, in case of compounding, what do we do? In case of compounding, we try and find out future value of present cash flows. In case of discounting, we do the other way. And that means what? That means in case of the discounting, we find out the present value of future cash flows. I'm sure all of us are aware as to what is time value. Time value is with the passage of time, there is a change in the value of money, and that is known as time value of money. Time value of money. And we understand in corporate decisions, and especially when you're doing the evaluation of mergers, amalgamations, acquisitions, organic growth, inorganic growth, when you're doing valuation for the purpose of projects, obviously the money that you are investing in the project is today, and the inflow that are going to happen to you are going to over the years. And we understand it very clearly that the money which I am going to receive over next few years, in terms of value, it is not same. And if it is not same in terms of value, I cannot take a decision. But I have to take a decision. So if I have to take a decision, what do I need to do? I need to convert the future cash flows in terms of present value, in terms of value of today. And how do we do that? We do that by discounting. And please remember, for discounting, what do we do? For discounting, we use a number that is known as cost of capital. That is number which is known as discounting factor. Now what this discounting factor is, this discounting factor is nothing but your cost of capital. So you can call it cost of capital, cost of opportunity, rate of return, target rate of return, minimum rate of return, required rate of return, hurdle rate, reference rate, and whatnot. So all those names ultimately are same for your discounting factor. As we saw in case of compounding, that is we found out future value of single cash flow. Likewise, in case of discounting also, we can have a situation where we need to find out present value of a single cash flow. So how do we find out the present value of single cash flow? Now this is how we will find out the present value of single cash flow. So present A is my cash flow. 1 upon K is the rate of discounting, raised to N is the period when I'm going to receive this cash flow or when I'm going to make this cash flow. So that is N. And how do I find out the present value investment factor? I will find out the present value investment factor by dividing 1 by 1 plus K raised to N. So which is nothing, this 1 plus K raised to N will give me the discounting factor. So that's your present value investment factor. And when I find out the present value investment factor, I just need to multiply it with my cash flow, and that gives me present value of future cash flow. Let's do a small case, and here it is. Suppose a particular investment opportunity provides you rupees 2000 at the end of 3 years. What is the present value of this cash inflow that you will get at the end of 3 years, with the interest rate being 5%? So interest rate meaning it is your discounting rate, it's your cost of capital. So you are going to receive 3000, we are going to receive 2000 rupees 3 years from hence, and so 3 years from hence, and your discounting factor or your cost of capital is 5%. How much will be the present value of this cash inflow for you at the end of 3 years? Should not take you more than 1 minute. Anyone who's ready with the answer, please tell me.
1727.67.
How much?
1727.67.
Excellent. I am sure everyone must be getting the same number. Anyone?
Yes.
Okay.
1720.
First class. Okay. So 1720 and 1727, it may be only for the reason of how much of digits you have taken post decimal point. Otherwise, I think it's perfectly fine. So as a concept, I think it's understood very clearly. Okay, as we saw in case of compounding, that you find out the present value, you find out the future value of single cash flow. In case of discounting also, then we saw to find out the future value of multiple cash flow. In case of discounting also we have to do many times the same thing. That means to find out present value of future cash flows. And I'm sure all of you must have done it 10,000 times. So whenever the company that you have worked for or the company that you have advised, you must have done a lot of project capital expenditure decisions, and that's where you must have projected the future cash flows. And to take a decision, you must have discounted all those future cash flows in terms of present value. And how would you do that? And you would do that by following this formula, and that is take all the cash flows one by one. So this is the cash flow for year 1, this is the cash flow for year 2, and this is the cash flow for the nth year, right? So and then this K is your discount factor, which is your cost of capital, reference rate, required rate of return, minimum rate of return, expected rate of return, and things like that. So using this formula, you would be able to find out the present value of multiple future cash flows. And this is a small example that you have. So a person is investing in a project which generates 1,500 in the first year, 2,000 in the second year, and 4,000 in the third year. His cost of capital is 5%. And so using these numbers, please find out the present value of these multiple cash flows that you have in front of you. Should not take you again more than 1.5 minutes. Anyone who is ready with the answer, please go ahead.